Hey everyone, I'm Jeremy Haig, the editor-in-chief of the monthly Denver Landlord's Digest newsletter, proudly presented by Keyrenter Denver Property Management, and we're on a mission. We understand that being a landlord or property investor comes with its fair share of challenges, and that's why we're here to help. With 9 years of hands-on experience managing over 1,000 rental properties, we've been through the trenches and learned the ropes so you don't have to. The Denver Landlord's Digest is your passport to the world of successful landlordship, curated by our team to provide essential insights to thousands of landlords and rental property investors worldwide. With our new monthly podcast, we want to take you behind the scenes of the Digest as we sit down with local industry experts, diving into burning topics related to rental properties and providing you valuable insights and actionable advice. Not a reader of the Digest yet? Click the link in the show notes so you never miss an upcoming issue, and visit our website at keyrenterdenver.com to check out our archive of past issues. Now, let's jump into today's conversation and discover new ways to thrive in the world of rental property management. Welcome to the Denver Landlord's Digest podcast. Welcome back to another episode of the Denver Landlord's Digest podcast. This podcast is supplemental material, if you will, to our monthly Denver Landlord's Digest e-newsletter that comes out every month. If you are not subscribed, make sure that you visit the link in our show notes so you are receiving all the additional blogs and content that go with this. Our goal here with this podcast is always just to sit down and create a space for conversation around what it is that industry leaders and thought leaders are experiencing, and just to share some of that information with you so you can feel in the know, and also get to experience a little bit of our own research process as we prepare each digest. My name is Jeremy Haig. I'm so super glad to be here as your host and moderator, but I am joined, as always, by Brandon Scholten, the CEO of Keyrenter Denver. How are you today, Brandon?
Doing great.
Good.
A little cold out there.
It is freezing today.
We made it in, so.
It is a very, very cold day today, but we made it into the studio. And today we have a really exciting topic, I think. We're obviously recording this one for the month of January, and it felt like a perfect time to discuss and visit some of the real estate market, both kind of revisiting this past year and then also talking about some strategies and forecasting, if you will, for what we anticipate to see in the year ahead. But in order to do that, I am very excited to welcome our special guest today. We have a very distinguished figure in the Denver real estate arena. We have Chris Lopez. Chris is not just an accomplished real estate entrepreneur and investor, but also an author and very well-respected voice in the industry. You host the Bigger Pockets House Hackers podcast, and you also host the Denver Real Estate Investing podcast. And I'm really excited to have you sit down and join us for this conversation today. And I wondered if you could just introduce yourself and tell us a little bit about your journey in this industry for our listeners.
Sure. Well, first off, thank you guys. I appreciate the kind words and love being here. And the January planning time frame of goal setting, this is my jam. Two big things I'm focused on is, hey, what are the trends and data telling you? Because the trend is your friend. Don't fight the trend. So if the trend is your friend, you make money. And I'm a big believer in goals. So if you don't have goals, why the heck are you investing, or why the heck are you working out? Clarify your goals and write them down. So yeah, perfect topic for January. So my story is I got into real estate investing about 10 years ago. And 10 years prior to that, I read Rich Dad, Poor Dad. I was like a lot of people. I was going to college, going to Virginia Tech for engineering, was going to go on the traditional, get a job, commute, work for a while, retire. Long story short, it wasn't exciting to me. I read Rich Dad, Poor Dad, and that just changed my life. I was like, wow, there is a world of investing. There is this world of entrepreneurship, and it ignited the entrepreneurial bug, but also the real estate bug. At the time, I didn't have any money, and all the wonderful resources we have now on the internet did not exist back then. This was like about 20 years ago, so very early on. But I built a really good internet business, graduated college not needing a job, and what I learned from that were two very important skills. The first was to focus on the trend. Now, I made good money, and part of that was I worked hard, but a big part was I just kind of got fortunate with the trend. I was very early days with the internet, learned Google, learned some of these early skill sets, and it's been a very profitable venture for me. The second thing I learned is that if you have the ability to network at scale, which is what online media does, this podcast, webinars, all that stuff, it is networking at scale. The potential that leads to in terms of like deal making or getting clients or helping people just allows you to, go at a much higher level and faster pace than you normally can. So those were two big items I learned in my 20s. And then about 2011, I bought my first rental property, actually my first house hack that I did convert to a rental property. And a couple years after that, I got serious into real estate. And I leveraged those skills of, hey, what's the trend I can ride? And how can I go out there and network at scale? So I did a fix and flip, made money, hated it though. I was like, yeah, fix and flipping is not for me. That's just way too tough. Did some wholesaling. I think I made $20,000 on like $60,000. So you guys can do the math on that. Not a great venture. And plus, I realized it was not my skill set. But then I spent a few months in doing some multifamily brokerage, where I was just a junior multifamily broker. And this was a very small boutique firm. And I learned a lot. I didn't have any success on there because that's a very long game. But made me realize, hey, this longer term rental game really fits, my personality, my expertise. Where fix and flipping and wholesaling, man, that is quick. And I'm not a quick person like the day to day. And where the rental investing, where it's a little bit of a slower timeline, and I call it more like swing trading. Hey, you're going to own the property for a couple years to 10 years. You can have a much more thoughtful business plan. And I say that's the route I want to go. So what I ended up doing was, as I was identifying trends, looking for opportunities, I realized that like the Denver and really the Front Range, rental scene was amazing. Go out there and buy single family homes, as you guys know, duplexes, fourplexes, a lot of these smaller properties that aren't traditionally thought of as like investment properties, like, the big boys do. But I realized, wow, this is an amazing opportunity where I can go out there, buy a place for fairly low down, have high growth potential for the value, and still good cash flow. So I started investing in that myself, and then I built a business on the back end called the Envision Advisors, which was an investor-friendly real estate team, help people go out there, buy real estate, house hacks, long-term rentals, short-term rentals, a lot of that. And the last couple of years, as I've made more connections through the podcast and networking, it led to some really cool opportunities. We developed a software called Property Llama, and now my business is partly helping people, buy rentals, invest, but also a big part of what I like to call, I'm using air quotes here, real estate financial planning. Let's sit down and not just look at the buy side metrics, but you've owned this property for 3, 4, 5 years. How do you optimize it? So a lot of my success has been built around what I'm seeing as an investor myself. I got into real estate to be an investor. My dream was not to be a real estate agent. My dream was not to be in the real estate industry. My dream was to have a really great lifestyle. And I realized that real estate investing was, I think, about the best way to do it in terms of like risk to reward. And then I always like to build a career or a business around what my interests are. So as I got honed in on what I wanted to invest in, I started identifying ways I could go out there and build a business.
I love that. Thank you so much for sharing a little bit of your background with us. Brandon, I wondered if you had any reflections just about the topic that we're talking about today, and maybe just thinking about a little bit of what you shared with us of just kind of before we get into the nitty gritty and the details. Do you have any thoughts on kind of why this topic and why now?
Yeah, I feel like there's so much to respond to from hearing Chris, first of all. But I love the idea of this, like, I'm going to start there, I've never said buy-side economics, but there is just like, that's what we've kind of identified. There's a mountain of information there, and then where it lacks is, okay, you're actually an active investor with a few properties, and you've got decisions to make and stuff, and then it gets a lot more muddy, and there's just not a lot of people dialing into that. So I think that's we're trying to hit kind of that same need, maybe from a different standpoint, but love that. And I remember looking a little bit at the work you're doing with Property Llama, and very cool stuff there. So, I think it's just, like Chris said, it's a great time of year to just reflect. And at least in our world, it's a slower time of year. I think for a lot of people that's true. And so, it's just a chance to set where you want to go in the year and dream a little bit, but also try to bring that down to like a tangible plan that you can execute on, and just think about what's the life I want to create, and how can I go about getting there. And I think it's just seasonally timely, and really helps people get serious about the path they're on, and not just live a reactive life.
Awesome. So let's jump into it a little bit. Let's start by talking about, you mentioned trends, and I think this is a great place for us to start and just talk about what were some of the major trends that we saw in 2023, or are some of them, any of them surprise you? What kind of, looking back on this past year, has really stood out as like, those are the things that really kind of sum up what we experienced in this industry last year?
Oh, yeah, the trend is your friend for sure. So, I mean, the high level, the growth party, the appreciation party, the double-digit rent appreciation, that party is over. Like, that big trend ended in all up and down the Front Range, like it did for many parts of the country. And that just means the market shifted. So some things that stood out to me a lot, I was really surprised about the price resiliency in the Denver market, especially in Q3, Q4. I was not expecting prices to really dip any the last year, just because, we have such a huge demand and supply imbalance. But back in August, September, as rates started climbing, and then they really spiked there, I think in that August, October, November timeframe. I was doing deals as a broker. I was actually selling my rentals as well. I thought prices would take a bigger hit. And, I mean, they took a very small hit, but nothing that was too crazy compared to seasonal averages. So I was very surprised how resilient prices were. I think another item that helped set the tone was just there's a lot of new landlord legislation coming down. Both in like Denver County with the rental application that took in 2023, that was time for single family homes to all get inspected and licensed. And then just the Colorado state legislature, like there was a lot of, I think there was like 9 or 10 different laws last year that got passed. They have good intents on there for helping, tenants go out there and, have a great place to live and protect tenants' rights. But it also makes it much more challenging for landlords to go out there, especially self-manage. So the headwinds on there were a lot stronger than anticipated. And looking forward into the next year, there's just going to be more of that type of legislation coming down, which just means it's trickier waters for landlords to navigate. And so two of my big takeaways on there is like, one, it was just another strong headwind where I was like, I'm going to pump the brakes on me buying more rentals. But I've also been a big fan of hiring property managers, a professional property manager for a long, long time because, I have a $500,000 asset. I don't want myself to screw it up. I want a professional to take care of it for me, like you guys. I think it's all the more reason for landlords, if you are self-managing, make sure you know the laws and you are up to date with them, and really reconsider if you self-managing is the best use of your time. Yeah, you can save 8, 9, 10%, but is it worth it with that stuff coming down? And then the last one was the increase in insurance. We knew taxes were going to go up, which was no surprise, but just the increases in insurance here along the Front Range, especially in the mountains, that went up way higher than I thought it was going to. So those are my 3 things: price resiliency, the legislation coming down, and just the huge increase in insurance.
Taking kind of from those and kind of turning that back around too for our listener to really understand it even more, how did some of these affect our investors, especially in this area, in the greater Denver area? Like how are some of our listeners and investors feeling the reactions to some of these?
They're saying, why don't the numbers work anymore?
Right.
We all have that reaction. It's just like, just the reality is like cash flow is very tough to find. And so really from early 2010s to 2022 or so was just this really Goldilocks time frame in history where you go out there and you could buy into a growing market like Denver, and you had a lot of tailwinds, huge growth, huge rent increases, really relatively low and stable taxes and insurance, and just very friendly. And then
to the point it was like you couldn't miss almost.
Yeah,
right?
everyone was a genius.
You can almost buy anything. Like there wasn't a subset of the market where you were getting crushed on anything. Yeah.
But this goes back to my first point. Ride the trend. The trend is your friend. When you have this giant trend where it's just like, wow, tailwind, 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 tailwind. And yeah, definitely some people took some black eyes on there, but it was very hard. You could throw a dart and have a good investment for the most part. So we had that huge party on there, and I was amazed how fast it just really shifted with all those kind of tailwinds becoming headwinds to where, hey, go put down 20%, have some good growth, have decent cash flow. And now we're often looking at, 35 or 40% down payment for a relatively turnkey property to have it have a marginal cash flow. So, it's made it a lot harder to go out there and find the deals that we used to see. And I just call that the old regime. So, hey, prices are staying where they're at. Our rent has stayed relatively flat, and I don't think it's going to change much next year or so. And of course, with insurance going up, taxes going up, it's just put a big compression on downward pressure on net operating income, and then you have high interest rates. It's just very hard to cash flow.
One of the ways that we saw that in our world was specifically in that Q3, Q4 was where we started to see rents really get hit, and it's always a little nuanced. A lot of it kind of came through in condos and that kind of thing, but people literally getting less than they did maybe 3 years ago. And it's sitting.
Can you give me an example? Like you were saying condos, what? I'm curious, what part of town or?
I think one of the hardest was the downtown condo, right? Which has always struggled where it's a building built in the 60s. You have, so the HOA fees are high. You have kind of an aging population that makes up the HOA board. And so it's just outdated. There's not the amenities. It doesn't feel like the place to be for the renter demographic, right? And so that was true 4 or 5 years ago, right? But it's just as true as ever. And then combined with you had this, you still had new apartments coming online. They're starting to feel it. So they're offering more discounts and more incentives and that kind of thing. So yeah, those were ones where we just, pulled our hair out to get it rented. And you had an owner who, a few years ago, they were making a little bit of cash flow on it, but now they're seeing taxes up, insurance up, rents down. And it was one of the things that happens, it's understandable, but they start pointing the finger at us of what are you doing wrong that this is happening? And so it just makes it a hard time to manage that in this business of they're just scrutinizing every little thing you do in policy and wanting to blame someone for why their world is getting turned upside down. So it was tough.
Yeah, I have never envied property managers because that's what happens, but I'm so appreciative of what you guys do. So I thank you. I love the fact that you guys out there manage properties for me and our investors. So thank you.
Absolutely. Okay, so now we've kind of established what the landscape of 2023 looked like a little bit. I would love to hear about some of the biggest lessons or strategies that you used to adapt in your own business, in your own kind of role in this industry. How have you approached some of this personally?
Oh, wow. Before I go into the nuances here for this, I will back up because I had mentioned in the beginning that I built the internet business in my 20s from early 2000s to 2010 or 11 and rode a huge trend. And just like Denver had so many tailwinds, I experienced the same thing. And all of a sudden, all those tailwinds just converted to headwinds, and just the same thing. It's 180 degrees, and that business became very hard. And
how long did you keep this? What was the internet business?
I built two, so it was a lot of marketing, health, and nutritional products.
Okay.
And then we built such a great marketing system around that for advertising and lead generation and funnels that we ended up selling that as a SaaS, as a software for subscription.
Okay.
And we provide some coaching and mentoring and marketing services.
Got it. Okay.
And so worked really well. But what I learned from that, and this early 30s, is I held on too long. If you guys have ever experienced that with a business or a relationship, you kind of hold on too long to that person. I knew the trends were against me, but for 2 years, I was like too afraid to let go. And I call those 2 years was like 2011, 2012, 13. I call it like my Lopez purgatory, where I was just like, it was just, everyone's has like their lows as an entrepreneur. That was my lows, and it was a purgatory, just because like I was getting no traction, having no success, and it was just miserable. Like I was not having fun, and plus I was burning cash because I wasn't burning it, but I just wasn't making as much, and I burned.
You were like
through some
working
cash
twice as hard for a quarter of it. Yeah.
Exactly that thing, and it's just
I can relate to a season like
right. I think for a lot of us that's part of the journey as an investor, as an entrepreneur, and there's nothing wrong with that as long as you learn from it. And when I had that experience, and I finally just said, okay, I don't know what I want to do, but I gotta stop this. I have to stop it. I had such relief, and then that's what allowed me to gain clarity into going into real estate as an investor and as an entrepreneur. That I said to myself, hey, I'm not going to fool myself that this is going to be great forever. It'll be great for a couple years or 10 years, but it will change. And when the market changes, I'm going to pivot with it, because I'd rather pivot and make a wrong decision than sit there and stay in purgatory, because that was miserable. So it became very clear at the end of 2022-ish time frame that, hey, the market is changing. It's time to pivot. So 2023 was a big year of pivot for me. And I when that happens, I just look at everything I was doing. So like as an investor, I stopped buying active rentals myself and actually started selling some rentals. And so if you kind of have the idea of like, hey, I'm going to sell high where I've just had some good price appreciation. I've got a good chunk of equity in there. Let me go reinvest that. And so I started selling some of my rentals and investing in other real estate asset classes where we had better numbers than like residential rental properties. So I did a big pivot from there, and that, I had to learn new skills. I had to learn a lot different aspects about investing, but also challenge some of my internal thought processes of, one was I would always do a 1031 exchange. And I was like, man, I will never sell a property without doing a 1031 exchange. Well, once I started doing numbers, looking at trends, and actually looking at what the tax bill would be versus having Uncle Sam be this like end all, boogeyman, I was like, oh, it's actually not that bad. So I sold a rental last year. I'm selling 2 or 3 rentals this year, and I'm paying capital gains. And I was like, oh, it's not that big of a deal. It's actually the smarter move. So I pivoted my investing strategy, and then also I really pivoted my business as well. I had an amazing team with Envision Advisors who helped a lot of people go out there and buy and sell rental properties. But since so much of that trend is over, a lot of our unique advantage is no longer there. So I actually pivoted that business as well to where we have a lot less operations on the brokerage side and more on the referral and advisory side, which is really our power. Hey, we can go out there and advise people, and then we can work with brokers who can help that investor execute based on their needs or their niche or their geographic location. So I pivoted my business and started focusing more on putting there some bigger deals, especially in the commercial space, because that's where we're seeing, prices drop, all these commercial people with floating rates. They're having trouble. Our clients who locked in at, 2.5% to 4% interest rates, most of them are pretty good for a couple of years. They got nothing to worry about 30-year fixed stuff. So pivot.
Okay.
Was how I would sum it up.
I love it. I'm going to open the floor for just a moment because we're kind of at the point now where I'm ready to turn the page and start looking at the year ahead. But I just wanted to open the floor if there are any other thoughts or reflections on 2023. And if not, we can absolutely just move forward to some of our forecasting and expectations for what's to come.
I don't know that I have anything. I'm super interested in what you said there, just in terms of I feel like I saw that a bunch over the past few years of those kind of investment-minded brokerages, not a bunch, but a few examples of it, where really the revenue model is real estate commissions, right? And then they do other services on top of that, but it's all to create real estate commissions. But that's interesting to me and maybe this isn't exactly what you said, but like figuring out a way to still make money advising clients in a way that's very, it's adding a lot of value to people, but you're not relying on real estate commissions as like the revenue driver there.
Yeah, and I think that was one of the things that I realized, because a lot of what I've done as an entrepreneur just comes from like my goals and also my roadblocks as an investor. And, I quickly learned cash on cash and cap rates and buying value add to create some value in there. But for example, like the first place I bought in 2011, when I bought the place, I was getting infinite return on there. I bought this place 0% down. I mean, I had no money out of pocket until 60 days after closing my first mortgage payment.
Wow.
Or 30 days, my first HOA payment. I'll stand corrected. So, infinite return. And I was like, I'll never sell this place. Like, why? I have no money into it. Well, fast forward 7 years, I've got $250,000 of equity, and my infinite return is now like I'm making 7% on my real estate piggy bank in my equity. And I was like, oh, what do I do with this? And it took me a good year or two to understand how to optimize the equity on there. And that's where I fell into more of the advisory and the planning. And I was like, well, I don't know how to do this. Google was not very helpful in telling me how to do that. It's all about, hey, buy. Like, yes, I know that, but what do I do once I've bought for a couple of years? And so I started learning how to like optimize a portfolio because my degree is in financial planning, and traditional stock and bond investing. You a lot of times those portfolios auto reinvest your dividends, or they auto rebalance, or your financial planner does that for you. In real estate, no one auto reinvests my cash flow. No one auto rebalances my portfolio. And rebalancing a portfolio is like, I got to sell this rental. That's a big deal. And selling rentals it's not cheap. Like there's high transaction cost. And so I really fell into, if I can add value, because I realized, hey, there's a big need out there because I need it. And a lot of my clients were like, can you do that for me? I was like, well, of course I can. And that led to a lot of great value, building a lot of great relationships, which led to a lot of transactions and all sorts of opportunities. So I'm a big believer in like, hey, look for where there's opportunity and pain points. And if there's not really no one, not many other people in that field competing with me, I like to compete in that field.
Yeah.
Cool. Let's kind of turn the page, so to speak, and start looking at the year ahead. As always, this podcast is not meant to serve as like financial or legal advice. This is just our way of sharing our perspective and experience. So, based on your experience, what are you forecasting in your own kind of radar, so to speak, for the Denver real estate market coming up this year? What's your state of the union, so to speak?
Ooh, I like that. All right, I think we'll see modest appreciation. There's going to be no crash in prices. I think we'll be, overall 1 to 4%, maybe 1 to 5% in appreciation this year.
Do you see this? I've heard some people talking like all it would take is a little dip in rates, and now the Fed said that they're going to drop like the funds rate. But do you think the prediction that I've heard some people say is there will be a frenzy as soon as that happens because you have all this built up demand sitting on the sideline. Do you think that creates a little pop, but it levels out, or just is that not?
I think there's the potential to create some pop. I mean, we're already seeing that. Like, I talked to a few small new build developers here locally, and once the rates kind of dropped, like early December, once Powell gave his forecast and rates dipped some, they said that December is one of their best last couple of years.
Oh, wow.
They saw a lot of people turn out. Lenders I talked to, they saw an uptick in applications, and so like even that little bit helped. Even without a major dip in interest rates, I think we'd still see very modest appreciation.
Sure.
I think there's a chance we'll see a very strong spring, and then as usual, quarter 3, quarter 4 will be tight. So from a macro standpoint, if you're selling the spring, and then man, there were some amazing deals in quarter 4 last year. Like, line up and look for some deals like quarter 3, quarter 4. If someone's selling their property, then that's not the ideal time to sell. So, no major distress. I think it'll be same thing, very hard to find cash flow without some creative strategies. I think rents will be relatively flat. Like, when I underwrite deals, I underwrite rents to be flat unless there's a major, unless they're like very below market rents in the place I'm buying. But I think it'll be flat rents for a year or two, and I think we'll see strong demand and rents go up again in 2025, 2026 timeframe. And I think insurance and taxes is kind of like the silent sleeper that's going to hurt a lot of people as well. I mean, we all know what our tax bills are, and I had very poor luck in contesting my taxes.
I tried on one, and I think I submitted it wrong or filled out the wrong form, and at some point I'm like, I give up on this.
Well, I'm betting at 0% when I did all mine last year. Okay. And I've heard that from other investors as well. And then, insurance is just walloping a lot of people. So I think it's going to be no major crash, but it's going to be a tough year. But I think for people that actually go out there and are willing to hustle a little bit more and have strict underwriting, I think they'll find some amazing deals. Yeah. But I think the ability to go out there and, hey, just be like me, kind of like a little more of a passive landlord. Hey, throwing 25% down and buying a property and turn the keys over to you guys here, those easy days are over. Yep. I'm saying there's opportunities. You have to work harder and sort through more deals.
I do think I'd just pause on the insurance piece of if you've just been sitting on the same policy for a while, it's a really good chance to, shop, find a broker that can hunt around. Because I actually had some insurance bills go down last year.
Really?
Just by... I had stuff I'd been sitting on forever and got renewals that went way up, so it was a chance to shop it. And it's worth looking into it.
Oh, I agree that it's worth looking into. When I've looked into it, I'm just like, okay, well, everything's higher.
Yeah, sure.
Yeah.
On a microcosmic sense, as you've kind of done your research, are there any neighborhoods or property types that have really stood out as something that investors should be looking out for if they're looking to increase their portfolio?
So one of my favorite strategies here, I call it the delayed flip. I don't think I can take credit for that. But like say, you buy a house in a transitioning neighborhood, so think, hey, we're in Sunnyside right now. I think about Sunnyside years ago, or parts of Sheridan and Federal, kind of like as things push out west, or some parts out in Aurora or up north, like areas that are just transitioning. I like those areas a lot because you can kind of see where the path of progress is growing. Hey, where's the money being pushed? Where's the industry? Where's this? Hey, this other side of Federal, all the houses are $100,000 higher in price. It's probably going to jump across the street here in the next couple of years at some point. So I love, I think this is really good for a lot of investors. Hey, go out there, buy a property, especially like a single-family home, where it's in pretty good rental grade. Doesn't need a lot of work to go out there and, update it. Sit on it for 3 to 7 years as that neighbor. Two things. The market appreciates, but I think that transition neighborhood could even pop faster. If the average is 3%, maybe that neighborhood's 6 or 7% a year just because it's that path of progress. And after a couple years, and it starts becoming higher end, and you see more properties being flipped and remodeled and scrapes, go do a delayed flip, fix your property, and then sell it, and either take the profits as a long-term capital gains or do a 1031. So I like the delayed flip.
Can I ask a clarifying question there? Because I think I've heard a ton of people over the last 10, 15 years of my involvement in this claim to know what's up and coming. And sometimes it's like Hoffman Heights comes to mind, right? As you had the hospital development and all that Fitzsimmons stuff, and it just didn't happen. Like it just continued to be this like really working class neighborhood. I don't recall seeing a scrape over there or anything. My info may be a little outdated, but what are the markers that you would say seem like that it's on the path to progress versus there's certain neighborhoods that just seem like they've lagged and nothing's changing?
Yeah, I definitely don't have like a crystal ball or some list of like, hey, here are the 3 neighborhoods to go in there and go and buy. So I look at it as just it's a calculated bet. Like I'm gonna buy a property, and if I'm good with what I think will be the normal market conditions, I'll buy it. Now, if I buy in this neighborhood, I give myself a higher chance that, hey, I think it will transition more, around hospitals. Always great areas, around areas where you can see across the street, hey, that area already popped. It's probably going to push over our way. But I think there's a few things, too, for people to keep in mind of like, there's certain parts of northern Denver where, hey, if your neighborhood is right there between 25 and 70, that's going to not help it. Or if you can smell the Purina factory, that's not going to end up being a high area. So I look at it as like, hey, if I will take the bet.
Sure.
Bet's
you might as
the
well.
right word, but I'll try to juice if I can buy an area that rides that wave. Great. If I can't, whatever. So I'm fine if it doesn't. I'm fine with the numbers, but if it does, I'm just like, cool, nice cherry on top.
Sure.
And then I can kind of brag that I'm a smart investor.
I like your framework too. If it doesn't need a lot of work initially, because I think we see that sometimes if people go in and they have to spend a ton of money just to get it rentable, but then you have all these new finishes and everything that are going to depreciate in those 3 to 7 years you own it. You'll end up having to do that again before you sell it. Something that can work as is, put the money in maybe on the back end and make it really marketable.
Yeah,
Or,
and plus if you go in there and do an expensive, if I go buy a house and then go put a $40,000 remodel in there, a lot of times, especially in this interest rate environment, I can't refi that money out. Now I've just locked another $30,000, $40,000, $50,000 in there, which for the most part, tenants don't appreciate that the way an owner-occupant home buyer will.
Right.
And I say that I've done that myself as a tenant, like looking back, I'm like, yeah, I've sometimes abused those places a little more than I should have, but that's the name of the game, right?
Sure.
We've all done that, or I think we've all probably mostly done that.
Do you feel, looking at the broader economy or economic trends of the year ahead, do you think those are going to impact this industry? And if so, kind of to what degree?
I don't think anything major. I mean, I think, everyone's been talking about the soft landing overall in the economy, and it seems like it's going all right. I think real estate's basically, the real estate industry's been in a recession, and I'm talking more like the professional side, not the price side. We've been in a recession for a year or so. I mean, I've known a lot of brokers and lenders who have, left the business, and these aren't newbies. They've been people in it for a decade or two. They've left the business. It's been very, very tough. So I think a lot of our pain is over. My prediction, I don't see rates going higher. I see them probably staying for a bit and hopefully dropping some. So I don't see any major factors. And I'm not an expert in that. I just look at, rates have gone up, insurance has gone up, and I think both of those will start. I think the pressure will ease off on both of those, which is great for a bunch of reasons.
Awesome. Okay, now we've given basically an overall landscape of kind of what we're anticipating. We've discussed a little bit about last year. We've discussed a little bit of our forecast for this year. And now I want to get into the part that I think most of our listeners are going to be most excited about, and that's our goal setting and strategic planning for the year ahead. And I think that this is going to be super helpful for a lot of people, especially like self-managing landlords or people that are kind of investing in a vacuum on their own. So I want to start by just discussing the importance of goal setting in real estate investment. Why is that something that our listeners and investors should be focusing on, especially this time of year?
To be very blunt, I just think it's insane for people to go out and do anything in life without goals. Whether it's working out, or whether it's setting financial goals. If you don't have a goal, if you don't know where you want to go, you are setting yourself for a disadvantage because you can't articulate what you need to do to get to point B. And then you also can't tell your team members, your realtors, your lenders, your property managers, you can't articulate to them where you want to go. And so what I've noticed, and I'm guilty of this too, so my degree's in financial planning, and 10 years ago, my wife's a veterinarian, and they have huge debt loads when they graduate, and they typically have very little financial savviness. I helped my wife, or now my wife, and a bunch of her friends do some very basic financial planning. And I was like, look, guys, write down your plan, write down your goals. By about the 10th time I told us, I was like, oh, damn. Lopez, you should probably write down your goals as well, take your own advice, right? Duh. And I kind of got in the habit of it. But what was very interesting is I wrote down my goals, and this was like a 2017 or 2018 blog post I did. It was just say, here are my goals. And it got the most traction I've kind of ever done in my life. Not in terms of just numbers, like it performed average on analytics, but in terms like when people would respond or they would email or we'd talk to them, like it just resonated. And I realized that, hey, if you don't have a clear on what you want to do, you're not going to get anywhere. And it's a big difference of, oh, I'm thinking about this. Oh, I want to achieve financial freedom. I want to achieve $10,000 a month in cash flow. Very different to think it or have a conversation with a cup of coffee with, like you guys right now, versus writing it down. Writing it down is a pain in the butt. It is hard to do because it forces you to clarify things. Like, right, some of the hardest things I do is my goals thing every year. So you get clarity, which is important for how to get to where you want to go. And then most important, you can tell your team, hey, team, here's what we're doing. Here's what I'm doing. And then they know what to do with you as well. So if you can't articulate it clearly, you're not going to achieve your goals, and your team can't do it either.
Yeah.
So, write down your goals. It's just, and as far as like methods and how-tos, there's a bazillion and one goal-setting systems. I don't think it really matters. I can just write it down is most important. My one tip on here, and this goes back to my 20s, is I look at goals in two ways. There's like an outcome-oriented goal, and there's the activity-based goal. So I relate to getting in shape. I want to lose 20 pounds and put on 10 pounds of muscle mass. That's the outcome goal. Hard to achieve, yes. Activities-based goal is I'm going to eat well for 80% of my meals, and I'll have 20% cheat meals. And I'm gonna go to the gym 3 days a week. Those are activity-based goals. So like with the outcome-based ones, I want to make $100,000 a year in real estate. Well, if you're already off it by month 2, you feel like a failure. And I've been there and done that. I went through a couple of years of vicious cycle, and you start talking down yourself negatively. You're a loser. You're not going to achieve it. F this. Just you get in the bad space. Versus, I can show up to the gym 3 days a week, or I can analyze 10 properties a week. I can go to 2 real estate meetups. I can go to this. I can go to that. So do activity-based things. So I'm big on yes, set where you want to goal, set where you want to go in terms of your desired outcome. We all are in here for money, but set some activities that you can accomplish no matter what, irrelevant to the market, irrelevant to how you're doing your goals. Because you can look back, hey, in the last 6 months, I went to the gym 180 times. Good, I'm proud of that. I'm on track for my goals. And I have found if you do the activities, the results will follow. Field of dreams, if you build it, they will come. Mm-hmm. If you do it, it usually comes.
Awesome.
I think I would, one thing I just want to add on that is I've been surprised this year, when this topic's come up, a lot of people have this concept of New Year's resolutions. And I'm surprised how many people react pretty negatively to that. Mm-hmm. And I think it's probably rooted in what you're saying. A few years ago, I told everybody this was my resolution and I failed by January 15th and felt like an idiot. And I don't want to go back through that again. It doesn't mean, I think the assumption is, that's bad or it didn't work for me to make goals. And so I'm not going to do that again. Sometimes it just takes, you learn and you adapt. And every year you might get a little bit better at setting realistic goals and goals that it just also helps you ask the question of what do I want and why do I want it? And I don't think you're ever in one goal planning setting or something going to answer all those questions for once and all. It's a process, but you get better as you just flex this muscle of what's my aspiration? Why do I want it? And then how could I kind of make this into something that's actually doable and it helps, it doesn't hurt, it doesn't just bring shame. But so I would just encourage people, like you said, there's a lot of methodologies out there and you may try one and it doesn't work great for you, but keep trying. And it's certainly, Peter Drucker talked about one of the most powerful things in business and specifically was to make predictions of what you think is going to happen in 3-6 months and just have the discipline to go look at it again in 3 to 6 months, and you'll learn where you're good at predicting and where you're terribly optimistic, unrealistically optimistic, where you surprise yourself with how much progress can be made. So I think goals and stuff is also a version of that, right? It's just testing your own abilities and getting better at seeing what's going to happen and being able to adapt to that.
That's so well said.
I'm definitely the sort of person too where if I can achieve something that's much more on a broad scale, then if I can break that down into much smaller pieces and can give myself the reward of achieving each of those small pieces, it's so much easier to also swallow if you don't arrive at the big goal, if you know that you did all of the little, at least that's how I function. I do my own, working at Keyrenter kind of inspired this for me too. I've kind of created my own personal KPI system of key performance indicators for my own podcast and my social media traction and my website and all that kind of stuff.
Yeah,
and just
kind
of distilled it down to in each category. I'm a one-person operation when it comes to my own entrepreneurial pursuits. And so I knew that it would be unrealistic for me to create this massive spreadsheet of all these numbers to track. So instead I just selected one that was for the next 6 months, this is the one that I feel represents the broadest amount of progress, of trajectory in a forward direction. But every Friday evening before the weekend, I fill out that sheet. Doesn't take me long at all. But then I get to have the reward of I hit 5% growth on that one KPI that I wanted. Cool. Whether or not I have the biggest podcast in the world by the end of this year now feels slightly less make or break, because there's smaller pieces that I've known that I've achieved along the way. So goals are definitely something that really helps me also to get clarity around what success looks like.
And celebrate the small wins.
Yeah, totally.
I mean, it's 1,000 steps to get to where you want to the finish line. You got to celebrate a couple steps along the way,
Yeah.
Hey, I climbed that first hill.
So what are some of your strategies for goal setting in a way that's particularly effective? Or I think you shared a little bit about this too, but also kind of how do you approach that goal setting process?
So I have learned I'm in my early 40s now that I tend to kind of go like I'm on the extreme of things. Like I either do something all the way or I like do nothing. I don't live in between.
Same way.
I think it's what a lot of investors and entrepreneurs. I think it's kind of part of like the what draws us here is you can be in control of it. So I've learned I'm very extreme, and I don't mean in a bad way. It's just and that brings me joy. And if I realize, hey, if I don't want to do it, I don't do it, or I try not to. So going back to that, my goals and the blog post I wrote. This is one of those literal shower thoughts because like, wow, this is amazing. Like I'm looking at from like an investor standpoint, from I'm a big believer in like community building. I'm also a big marketer. I always want more eyeballs, more people I talk to. And I was like, I should start a challenge where I get other people to write their goals. And then that actually turned into a book. And so I was like, hey, what the heck? I'll just publish a book. Because I have three main things I look at for goal setting, which is like I got to write down my goals. I want to share my goals with someone, even if it's just with like the four guys in the room here. And I want to be held accountable. I always relate back to the gym buddy. Hey, if you're going to work out at 5 a.m. in the morning, it's very easy to skip it. But I'm meeting Brandon tomorrow at Gold's Gym tomorrow morning, and he's going to be there at 5 a.m. I don't let Brandon down, right?
Yeah.
And I get a little competitive with him as well. So that's where the book came out. So I publish a book every year called The Colorado Guide to Real Estate Investing Strategies. And from a very big, this is actually, number one, a selfish thing for me to do because I write my goal, I share a podcast, and it is slightly terrifying and also probably one of the hardest content pieces I do every year. It's one of the few things I probably rewrite and re-record like 3 to 6 times, which I almost never do. Because I want to say, I'm like, oh, wow, I have to listen to this a year and 2,000 people to read this. No, that's not right. But I started doing it to where it forces me and it got other people to do. Like anyone can come write a chapter and contribute. And I think that's how we got connected a few years ago, Brandon. I think you're due a chapter in this year's book too.
I am due. I worked on it last year and maybe had your thing of after a couple rewrites, I just crumpled it up and was like, I can't do this.
No, you got to do it this year.
So hold me to
Jeremy, I'm going to throw you in there too since you're a KPI guy, man. So, I love it. People write it in here because, like, it's an amazing way, again, to get clarity. If you write it down, and not just on a Google Doc, but you write it down to where, 2,000 or 3,000 people read this a year. It's a pretty small community, but it's all people like us. They're in the game, and they're high-caliber people. You get the accountability. You get some public sharing, but it also leads to deals. It leads to connections. It leads to opportunities. So like I go to the extreme, but that feeds back to like me helping more investors, me feeding, the marketing funnel, which feeds deals, it feeds investors. So I love that. And I love if you guys wrote a chapter in here and any of your clients or listeners, you're all welcome to write chapters in here because it's an extreme way to go out there and do goal setting.
Awesome. I will make sure that we have all your contact information in here as well, so they can reach out to you if they would like to. I know that we probably have some listeners right now that are thinking, I genuinely have no idea what I should even be setting as a goal. I have no idea what strategies I should be considering. How do you even start this? So I was curious, what strategies do you think investors should maybe be considering in 2024?
So before we go in that granular, one of the things and I know where people are with the goal setting, I think this just, you made me think of this, and this actually goes back to college once I realized I don't want to have a traditional career as an engineer. I didn't know what I wanted to do, so I started with what I did not want to do. I created a do not want list. And it brought such extreme clarity. And I've done this numerous times, and I've shared it with friends and colleagues, and they've got a lot of benefit out of it. Like back in college, it was like, well, I don't want to commute. I don't want to wear dress shoes. I don't want to have a 9-to-5 job. Like it was just a couple of simple things. Like, cool, I know I don't want to do that.
It took me working downtown at a firm for like 6 months of having to dress up every day that clarified I don't want that.
Yeah.
That's a hard no. It's a deal breaker on any potential career I'm going to explore. Yeah.
And I think it's a really good thing. If you don't know what you want to do, get clarity on what you don't want to do. And that's usually, and most people can say, oh yeah, I don't want this, I don't want that, whether it's investing or someone that they're dating or like, we all know what we don't want or don't like. That's we can all see that very clearly. Start with that. And then as far as like strategies into like, going on there is it's a blend of like, hey, being realistic on what your skill sets are, what you do or don't want to do, and then seeing where the opportunity matches up in the marketplace. Like, there are some amazing opportunities right now in the marketplace for house hacking. Hey, go out there and buy a place for 5% down. Amazing opportunities right now. If you're hands-on, amazing deals. Go out there and go get a big house, add 2 bedrooms to the basement. If you can, obviously legally do it, add your egress windows in there. And then you can move to a room-by-room rental strategy, or you can then probably also increase the rent by, $500, $800. If you go from a 3 to 5 or 6 bedroom, the rents go up. Now, while that doesn't add value and equity in terms like the BRRRR strategy or cash out refi, it's usually a very easy way with a lot of times, under $10,000, you can add a couple rooms and egress windows. You can increase cash flow and have those improvements pay back within a year. So I'm a big fan of house hacking. I'm a big fan of looking for single-family homes where you can add bedrooms. Big bonus for them transitioning area to do a delayed flip. Another play I like a lot right now is looking at like subsidized housing. I have seen some of the, it's like Section 8 and those types of voucher programs. I'm not updated on all the different counties out there, but I remember one of my clients, he just got updated rents. I think it was in Aurora. And oh my gosh, I don't want to misquote it, but the amount of rents that jumped. I think subsidized housing can be a great play for people that can find the right property and really tailor to that. Learn that niche, because there's a lot of great people out there who need housing, and there are different housing authorities that will pay top dollar on rent, sometimes more. And especially in a year of shaky economic cycle, hey, I'm very happy with the government writing me a check. If the government stops writing me a check, we got bigger problems. It's time to go out, to your bug out house in the mountains versus worrying about anything like that. So, like, I'm a big fan of, like, subsidized housing as well for potential. And I've seen some big wins on rents for, like, some of the single-family homes.
I think one of the nuances on that strategy is, like, basically houses sell based on square footage, a little bit on bedroom and bath, but primarily houses are bought and sold based on like above grade finished square feet, right, is probably the biggest driver. So finding the 3-bed that's only 1,000 square feet is often. Section 8 rents are driven strictly on bedrooms and do bathrooms influence it? I can't remember, but it might just be bedrooms.
I know bedrooms for sure. Bathrooms, I don't think so.
Yeah, so it really rewards that like small bedrooms packed into a small house kind of thing. So just a way you can maybe find something that cash flows still in this market by going after that.
Well, it's also a way too, is like, this is one of like the, the nice inefficient ways in MLS system is like, realtors aren't always the most accurate entering data in MLS. And a lot of times it just comes down to word filtering on how you can enter data, or also, search data and look for data. So it comes out to, hey, just go walk properties. Hey, go walk a property. Oh my gosh, this is a huge basement on here. Oh,
they
checked
a bedroom,
no there. Yeah, well, that's sometimes what they do.
Yeah.
And you can walk in and like, wow, this is an amazing layout. Or hey, this actually has like a kitchenette in the basement. We could do this on here. So this is where, if you're willing to like,
that's a great insight.
Hustle a little bit and search, do some high level filters on the MLS, but realize, that's not, don't go off of that. You can find some good deals on there. And so we've had a lot of success with that. Again, you can add value from a rent increase, but not really add a lot of value from an equity increase. And like adding major value, pulling money out right now is a very hard play with the prices and the rents, prices and the rates. But some good opportunity for going there, increasing rents for adding bedrooms, or looking about which housing authority, which part of town, has the highest rents for these houses. Like, there's some really good opportunities out there.
This is such great information. Thank you so much.
Good.
One quick thing I'd add on, back to your question, is a lot of our clients have a rental property that they used to live in, and they, like I've talked about this before, but basically, I think if you were to distill it down, like why did you decide to hold on to this as a rental? I mean, it's not much more sophisticated than it just kind of seemed like a good idea.
Yeah.
Rental property, like I could afford it, and why not? And it cash flowed a little bit, when we ran the numbers. So sometimes maybe a start on this road of like what goals might you have, that kind of thing, is start by knowing what you have too. And so, that's something we're happy to help with. I'm sure Chris has lots of tools for just like looking at a basic like analysis of what is it you have right now, how's it performing, how's your equity performing in there. He talked about that piece. Because if you bought this thing in 2013, you might feel great about $500 worth of cash flow, but when you actually look, you have $300,000 of equity, and it's not really actually returning much, given that amount of money is tied up in there. So, knowing what you have, I think, is a good starting point to then figure out what kind of goals could I have, or where would it make sense to put in effort here. And,
And then also, I mean, to get more nuanced here, and that's a great point. Is that if you've got $250,000 in equity, or a lot of these people have $500,000 in equity, you have options. You can pull out a HELOC. Harder now, but you can. You could sell that property and then go buy 2 or 3 other properties. You could trade up to a fourplex, or if you have a couple rental properties, sell one of the least performing ones, or just the one that's maybe just sometimes just get like kind of like bad luck properties. Just that just got hit with a bad tenant, bad this, bad that, frozen pipe, whatever happens. Sell one of the properties that's one of your least performers, and then go buy something that's a better fit for your goals, or that might be less maintenance. I'm a big fan. Some people want to have all their properties and control it. I used to be that way, and now I'm happy to like invest with other people, and they're in control of the operations. I like to have a mixture of both. But go out there and sell some of these older homes and go buy new build. Like some of the new builds right now, like an infill townhome or some of these subdivisions out, up north or out east. Get some amazing deals out there. Then you're buying new construction. And I'm sure as a property manager, what's the difference in maintenance on new construction versus...
the hardest part is they always come with at least a 1-year builder's warranty, but actually getting the builders to go fix something is
my God.
So we'll deal with it, though. But you're right. It's going to generally be a lot less maintenance. And like if you have $500,000 worth of equity sitting in some, you could actually, if you're just super risk averse, you could go buy something with cash, have no debt on it, and it's all cash flow.
Yep.
So,
I'm kind of really disappointed that our hour has already like flown by, and we're coming towards the end of the time that we have together today. But I wanted to see if we could just each take a moment of just kind of a broad strokes recap of what we've talked about today. And I'm going to make sure that I can share additional resources from you, Chris, in our show notes for anybody that wants to go deeper, wants to take a look at the book, wants to kind of get themselves involved in what it is that you do. We also, of course, have the digest that you can engage with, or reach out to Keyrenter if you want to discuss some of this further. We're all down for being a support space when it comes to the educational and thought leadership. But if you were just share kind of some wrap-up thoughts for us.
Yeah, high level, pivot or go stale. I used to say pivot or die, not quite the same. Pivot or go stale. Like, what worked in the 2010s as far as a lot of times like the investing strategies, that's over. Investing still works. It's just a different way to play the game now. So don't hold on to the old stuff. Focus on new stuff and embrace it as an investor. And if you're an entrepreneur like we are, do it as an entrepreneur as well. And then just look at the macro trends. Like if you're a self-managing landlord, I would highly recommend you look at all the laws and, go get a property manager because they're updating all the laws. And then realize that the easy days of investing are over. I'm not saying there's no longer opportunities out there. They're just tougher to find, and there's fewer deals that go to fewer investors, and it's going to take more sorting and more work to go out there and get really good deals in the market. And if you do have property you've owned for a while, you have an amazing opportunity to reevaluate your goals and then come out and look at how those properties are really performing. And that's a big reason we built the Property Llama software. You can go out there, upload your properties, get a free analysis, helps you kind of understand how it's performing today. And that helps you understand how you can align your portfolio with your goals and also potentially maybe make some sell and trade ups or sell and exits to go out there and reinvest the equity that Denver was so nice to gift us.
Awesome. Brandon, do you have any kind of takeaways that we can leave our listeners with on this one before we say goodbye?
Yeah. Before I forget, just again, thanks to Chris for joining us and braving the sno and the
I love this. We
No,
can talk another hour, guys.
This was fantastic.
I think one thing that, again, I want to be sensitive to. A lot of our listeners probably have a little bit of like, I don't know where to start, that kind of thing. I think a good goal, if you're in that space, is like find some friends or thought partners that you can, just have people in your sphere who can talk about this kind of thing, who you can, put together your pro forma and then have somebody to unpack it with a little bit. And that could be in the form of an advisor or your property manager or whatever. But I think there's lots of people out there willing to have these conversations and get you pointed in the right direction. And just having that like small community for yourself that holds you accountable and that is just driving you forward towards making better decisions and having awareness around opportunities and that kind of thing, I think will have a huge impact for you.
I think that's a great piece of insight.
I love that. Can I add on something on there?
Please.
Go to meetups, go to events, go to classes, go to happy hours, whatever it is like I know COVID kind of threw all that stuff off, but I mean I meet so many great people at these events, and the thing is now there's usually fewer people out at these events. So you actually have a better chance of networking with like-minded people or networking with some potential advisors or mentors as well. So like if you're out there not sure what to do, you have your goals written down and you're not going to like a couple events a month, Bigger Pockets, iCore, whatever classes, whatever it is, get your head in the game and write your goals and go to local events. You'll meet so many amazing people.
I'll make sure to include the link, the Digest and Keyrenter kind of partner up to have one once a month. I'll make sure that I include the link directly to that meetup group so you can keep track of any upcoming events that we have, because I think that's great, a great piece
February could be our goal review. And
that's a great idea.
Dude, let's talk more details out. I would love to.
Yeah, that's a great idea. Well, I just want to say thank you once again, Chris. This has been absolutely fantastic. I know we'd love to get you back on here again sometime soon, pick another topic to pick your brain about. But thank you so much for braving the cold with us. And I hope you all enjoyed this episode. And I can't wait to catch you all next month for our next episode. Thank you all.
Thank you.
Thanks.